So how does a VA loan actually work? Not the elevator pitch version, but the real step-by-step from the moment that you start the process to the day that you actually get your keys on a new home. That question, it just came in. And step 8, when we get to it, don't miss it because that's the one no one really warned you about. That's the one that's going to turn your closing into a nightmare. So stay tuned. But with that, I'm going to read the question and we'll get right into it. The question is, Weldon, we just got orders to Norfolk and this will be our first PCS where we actually buy a house. We've been renting our last 2 duty stations, but rates, they're finally coming down and everyone keeps telling us to use our VA loan. My husband, he has 8 years in the Navy. How does the VA loan actually work? Like from the very beginning to when we get the keys, what are all the steps? Great question. I love it. And thank you for submitting it because that's how we get better. It was perfect information or question for this video. But what I read right there versus what I heard, it's actually 2 different things. What I read there was 8 years of service, first time buying, and the question is, what are all the steps? But here's what's not being asked. And it has to do with just not knowing, but it actually helps you set up yourself up for success. How do I do this home purchase and not regret it? Because this benefit, this VA loan entitlement that they have earned, it's not a one-time thing. How they use it right now on this house, it actually affects their options at the next duty station and the one after that. The stakes of buying a home with your VA loan, they're actually much larger than most people realize. And what most VA loan guides, what they get wrong, they give you the steps without explaining why each one matters. And when you don't understand the why, that's when you start taking the shortcuts. And when you take the shortcuts, you're going to fall into financial traps. So today, I'm going to walk you through the complete VA loan process. And it's 10 steps from eligibility to keys. And when we're done, you're going to have the full picture, what happens at each stage, and then the questions to ask your lender, your real estate professional, and how to sidestep the mistakes that trip up first-time VA homebuyers. Now let's get into it with step 1, which is verify your eligibility. Now, before anything else, you need to confirm that you actually qualify for a VA loan. And for active duty, that you typically need 90 days of continuous service. And for veterans, it's going to depend on when and how long you served and the type of discharge that you had. So Guard and Reserve members, you need 6 years of service or 90 days of active duty under Title 10. It's, again, your COE, your Certificate of Eligibility. That's what you need to get. And the way you do that is through the e-benefits or a lender. If you need one, call me. I'll connect you with one. They can pull that in 30 seconds, 5 minutes, whatever it is. It's a very short amount of time, almost immediately. But that COE, that is going to tell you 2 different things. And it's going to tell you whether or not you're eligible, and 2, how much entitlement that you have available. Don't skip this step. I've seen families get excited about a house, like I said, make an offer, and then find out that their entitlement, it was actually tied up from a previous purchase. And that's not a good feeling. The right team along your side, they're not going to let you make that mistake, but that's why I'm sharing it today. So step 2, this is understand your entitlement. Your entitlement, it's actually what most people get wrong about the VA loan. So they think it's a one-time benefit. And I'm here to tell you it's not. You can use it multiple times. Your entitlement, it's basically how much the VA is going to guarantee on your loan. So a full entitlement, what that means is that you can buy with 0 down payment and no loan limit at all. You heard that right, no loan limit. It depends on if you qualify, of course, right? But if you've used your VA loan before and you haven't restored it, well, you might have a partial entitlement. But the good news is, if you've paid off a previous VA loan or you sold that property, you can restore, again, back to the full entitlement to be able to put 0 down. And if you still have that VA loan on that other property, you still might be able to use your remaining entitlement for a second home. That's your primary home, but you'll likely need a down payment with it. So this is where a lot of PCS families, they get confused. And you're not limited to just one VA loan ever. The question is whether you've restored your entitlement. And that is what matters. I know what I just covered on entitlement, that can feel overwhelming. So what I built was something called transition checkpoints. It's exactly what it sounds like. Checkpoint questions. So link, it's in the description below. And this is going to walk you through a process, a decision process for what might be best for your situation. It's 8 to 10 simple questions that are going to help you actually see what's coming up in front of you so you can plan ahead. What decisions that you need to make. That way, if you're selling, you're not leaving money on the table and you have the right team supporting you. And if you're thinking about buying, you're not getting into something that you're going to regret because the fundamentals just aren't there. You're not prepared financially, or you don't have the right teammates guiding you. We identify all that up front so that way you can move forward with clarity during this transition. It's what we're all trying to do as human beings. It takes 5 minutes, and if you want to book a free call, it's right there. I will talk you through it. That way you have the information. I serve people nationwide every single day, and we'll go through the numbers together. Step 3, this is find a savvy lender. Now, not all lenders are created equal when it comes to VA loans. So you want someone who does VA loans regularly, not just someone who's done 3 in their career. So something a lot of veterans don't know, and the reason why this is important is you want that advisor, that lender, to be able to tell you and explain all of your options. So if you have a service-connected disability of 10% or more, your VA funding fee, it's actually waived entirely, gone. And for first-time home users with now that fee gone and no down payment, that's an incredible opportunity. That fee, it's normally 2.15% of the loan. And if I like using $400,000 as an example, but for that home, that loan amount, that's going to be $8,600 that you just saved. You kept that in your pocket. You didn't roll it into the loan. Now, a good VA lender, they're going to explain this up front so that way you could do the right planning. That fee, again, like I said, it could be rolled into the loan, and so you could still get to zero, or you could have your sellers, whoever's selling you the home, pay for that in what's called seller concessions. But whenever you talk to your lender, you're going to need to have your disability paperwork there so that way it doesn't come out of your pocket and they can get the right coordination on it. So that's the biggest financial advantage of your VA benefit. And this is, again, one that most people don't fully appreciate. It's that you have no PMI. And PMI stands for private mortgage insurance. And our counterparts, our civilian counterparts that take out conventional loans, well, if you put down less than 20% towards the house, you're paying private mortgage insurance every single month. And that can be $200 to $400, even more depending on how much it is. That money is just gone. Not going towards your equity, going to something else. It's going to an insurance company. And the VA loans, they don't have it. That is the beauty of them. So zero PMI, even with zero down. And over 30 years, think about this, that's over $100,000 that you get to keep versus giving it to a third party. Pretty awesome in my book. Now, step 4, this is get pre-approved for your loan. Now, there's something that we have to talk about, and there's a difference between pre-approval and pre-qualification. So pre-qualification, what that is, that's an estimate. Pre-approval, you're actually verified by the lender. They're guaranteeing and assuring you, hey, yes, you can put forward an offer and I have a letter that I'm going to give you. So that way, the seller knows that you are qualified and you mean business. So it means that the lender, that they have actually looked at your income, your credit, your debt, and they've said, yes, we'll lend you this amount of money. That pre-approval letter, that is what you'll submit, again, with the offer. That tells the sellers that you are serious and that you've done your due diligence. Now, here's a tip. If you're PCSing, start this process before your new duty station. You can get pre-approved remotely. Then, when you hit the ground, you're ready to make offers immediately instead of scrambling while your household goods are in transit. Now, of course, you can come out before your duty station and search too, but a lot of folks, they end up just coming out here once or wherever they're going and looking at homes then, but this helps you in that preparation. And preparation, that is what helps you make good decisions. Now, as part of your preparation step, understand your budget, what the BAH is, and then, of course, what you want long term. And what I might mean by this is someone that is moving here or moving somewhere across the country, If you're only going to stay there for 3 years and then hold on to it as a rental or whatever the case might be, alternatively, if you're coming up on retirement and you want to spend a little bit more, that probably makes sense. But every person's situation is different. What I want to warn you about is just because you do qualify for it doesn't mean you should you should go buy that amount of house. It depends on your situation, right? And that's what needs to be optimized. Okay, I'm off my soapbox. Moving to step 5, and that is define what you need now. That way you know your budget. You can think about your actual needs. How many bedrooms does your family need? Do you need a home office? How far are you willing to commute to base? What are the schools like? All those mental calculations that you need, I'd suggest writing them down. And then that helps triangulate on the type of home or where the home is that's going to serve your needs. Because in my opinion, it's not just a wish list. It's a filter. The more specific that you are, the faster your search is going to go. And we're in a time crunch whenever you're in uniform. Okay, so, and if you're in a competitive market, you're even more in a time crunch. And so speed matters. I also want to say, think about your next move. And if there's a chance that you're going to PCS in 2 to 3 years and you want to rent this house out, that changes the kind of property that makes sense. So a single family home in a good school district, again, the rent's that was going to rent easier than a condo with high HOA fees and your cash flow is more constrained. All right, we are halfway through the VA loan process. And if you've made it this far, you're already ahead of most first-time home buyers, because the next 5 steps, they are where I see deals fall apart, especially again, step 8. Remember that one? Let's keep going. And here's step 6. Step 6, this is find a military experienced agent or real estate professional. So you want someone who understands military timelines. PCS moves, they don't wait. If your report date is in July and you're looking at houses in, say, May, your agent, your professional, they need to know how to move fast. And that good agent, they're going to understand VA specific issues. They're going to know which neighborhoods have homes that typically pass VA, or at least be able to walk into any home and just look at it and say, okay, we're going to have issues or we're not, because there's going to be an appraisal because the home has to meet certain standards. Now, they're going to also know how to write offers that don't make sellers nervous about the VA process. Because if they don't have any experience with it, well, there is some old misnomers that VA loans were more difficult. I think that's not the case anymore. But if all they've ever worked with, so let's just say it's an older couple, is their uncle who sold them the property 30 years ago, well, it might have been true then, but today it's not so much the case. So if you're PCSing somewhere where you've never been, you need someone who knows that market, again, cold, like the back of their hand. That's where having a network matters. Someone who can connect you with the right person in any market. All right, step 7, this is search, show, and make an offer. So once you find a house that you love or that meets your requirements, and you don't have to love it, but you're setting yourself up for success. Perhaps if you bought it in an area that you didn't want originally, but you know it's going to rent it out longer and better in the future. There you go. There's trade-offs. But all that said, VA loans, they have some specific requirements that you need to know about. Now, the first one is that the VA, they prohibit buyers from paying certain fees. So your lender and your real estate professional, they're going to be able to handle this and explain what you can pay for versus what the seller has to pay for. But know that there are some closing costs that you cannot cover, all right? And you'll go over that in a one-on-one session. Now, also, number 2, there's no requirement for earnest money on VA loans. That said, it doesn't mean it's the right move. It's more just for your awareness, your SA, your situational awareness. Now, in a competitive market, you're going to probably actually want to include it because it shows that you're serious. And that earnest money, it's going to go towards your closing costs at the end of everything anyways. So it is something to be aware of. And you might even get all that money back if you roll all the money and all the fees into the loan itself, then you're able to get that cash back at closing. Now, the third thing, and this is important because you can negotiate with the seller for up to 4% of the purchase price and to have that money go towards your closing costs. Now, the closing costs, they could be prepaid insurance, prepaid homeowner association. It could be your funding fee. And some of those you have to pay in full versus partial. But just know that when you ask for that 4%, it gives you options and keeps more money in your pocket. So that said, moving on to step 8, the VA appraisal process. So this is the one, if you remember, where I said stick around for it, because this is where the deals, they actually fall apart. And it's exactly the case. So there are 4 things that I'm going to explain that really are the cause of many deals falling apart at the table. And when you look at this list, you're going to be able to walk through that house and know what to look for to know if it's a high risk or not. So the VA, they're going to send that appraiser out there, and he's going to have 2 jobs. One, it's to make sure the home is worth what you're paying for it, what you're offering for it. And 2, it's so that they can make sure that it meets MPRs, minimum property requirements. So these are safety and livability standards. Here's the list that the VA appraiser primarily looks for. 1, it's peeling paint. 2, it's broken handrails going downstairs, exposed wiring, and then roofing problems. Now, they don't get on the roof, they stand on the ground, they look up and do their best. But those are some major deal killers. I've seen it even be as trivial as some carpet that had been sliced and there was a worn area. Anyway, it could be any number of reasons, but those are 4 of the big ones. Now, what they're going to require is these are going to be conditions of the loan of whoever the mortgage company is to say the seller must fix XYZ, and the appraiser is going to have to come back out and make sure that the house meets those conditions. And then once he gives us thumbs up, or once she gives her thumbs up, it is back to the mortgage company. Then they'll give you the loan. Okay. So the way to avoid this, though, it's you work with a real estate professional who previews homes with MPRs in mind. So minimum property requirements, right? So they're going to spot those potential issues before you make an offer. And when you do your own inspection, again, which is separate from the appraisal process, you'll know what might come up. So if the appraisal comes in low, meaning the house isn't worth what you offered, you have options. You can renegotiate the price, pay the difference out of pocket, or just walk away entirely. That's why understanding the market value before you offer, why it matters. So that list I just gave you, peeling paint, broken handrails, exposed wiring, roofing problems. Like, save this video for that. Click the like, click the subscribe, and then the little save option there too. These are the issues that are going to kill deals over and over again, and you can come back and refresh yourself on it. So if you've got this list in your hand before you tour houses, you're going to be able to spot some of the problems before they become surprises. Step 9, this is the clear to close piece. So once that appraisal, it gets back into the mortgage company and it's done, all the repairs have been accomplished, your file, it goes to the lender and for what's called final underwriting. They're going to verify that your employment is still intact. They're going to check that nothing has changed since pre-approval. And this is a critical warning here. Do not make any major purchases between pre-approval and closing. Don't buy a car. Don't open a new credit card. Don't finance furniture. Any of these things, they can change your debt to income ratio and jeopardize your loan. So when everything checks out though, you'll get what's called clear to close. That means the lender that they're ready to fund the loan. You're going to receive closing disclosures showing your final numbers, and that's your opportunity to review it carefully and compare it to what you originally were quoted. Take this seriously. Your lender and your real estate professional should be able to walk you through all of that as well. So step 10, this is closing day. This is when the house officially becomes yours. Congratulations. So you've signed a lot of documents for about an hour, and after that, the funds will be wired, or perhaps it already happened. You bring the cashier's check. The title companies, they're going to give you the options and walk through that process for you. But once everything is funded and it's recorded, you get the keys. Now, one thing that's unique to VA loans is you see the funding fee on your closing disclosure. So remember that it's either rolled into your loan or paid up front, or if you have a service-connected disability, you never recharged it in the first place, or it comes off at, balances out with concessions. Like you'll have options. But after closing, don't forget to file for your homestead exemption with the county. So check to see if your state, if they offer any kind of property tax exemptions for veterans. Every state is different, but it's worth looking into. And here's the wealth perspective that most people miss. That VA loan that you just used, you can use it again. If you PCS and rent this house out, your entitlement can be restored once it's paid off, or you sell it, or you have a partial entitlement remaining. You didn't use everything that you had, right? Or were entitled to, I should say. Some military families, they build entire real estate portfolios one PCS at a time. So the house, it's not just where you live, it's actually a wealth building tool. So if you've made it this far through the video, here's what I want you to do. I want you to click the link in the description below. Start your PCS checkpoints. These are the checkpoints that, hey, what do I need to think about in order to set this move up for success? It is a simple 8 to 10 questions, and they're going to help you see, again, which decisions are actually in front of you. Once you understand your situation and some of the dynamics within it, we don't just stop at real estate. We make connections to CPAs, to certified financial planners, to real estate attorneys if you need it. Whatever you need to make sure that you're set up for success. Now, book a free call there. I work with people nationwide every single day. We'll go through the numbers together. We'll figure out what makes sense. I'll give you the questions to ask those real estate professionals in that area that you're going. I'll even connect you with them. That's what transition checkpoints, what it's all about. Planning with purpose. I'm Weldon Hobbs. I'm a veteran. I'm a transition strategist, and I've helped hundreds of military families make their PCS a little smoother. Good decisions, they start with good information, and I'll see you in the next one.